Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. So cool. Actually, people know the words. Right on. Anyway, here we are reporting in from Portugal. Oh my God! Way! God, you can hear all that, eh? I don't know what Josh is showing on the camera, but I think he's showing the whole crew here. Let's see. Oh yeah, look at that. We got a whole bunch of people here in the lounge, actually, in our physical lounge. And actually, this is exactly what I kind of wanted to have happen. Today, we went and saw the coolest place. I don't know whether we have any pictures we can show you. Maybe we'll show them to you next week. But it had TRI campus written all over it. Somebody said that they could envision Brian walking around the grounds in swaddling robes and funny hair as a monk or a sensei beamish teaching in person the ways of the universe. Wow, whole lightsaber and everything. Anyway, a lot of fun. Actually, we just got back in probably about a half hour, 45 minutes ago. And actually, what was really cool about this place is it was really close to almost like a medieval village. And we got to go in and see the old church and the castle and the whole thing. It was super cool. So, having lots of fun here in Portugal. Where are we, gang? Portugal! So we got the cheap seats here, full, the peanut gallery. So if I do call out for help, I'm sure they'll be more than happy to help me through the show here today. I don't even really know where to begin. We are in between school terms. This is like going out on YouTube, and it's sort of like for the live world, isn't it? So, God, what I'm supposed to think multifaceted social media. So the question is, what did the TikTok people want to hear? Something along those lines. I don't know. Anyway, Josh is training me slowly but surely. I know it takes an old long time to teach this old dog new tricks. Actually, you know what I found out, which was so cool, and I'm not even quite sure how the hell I did it, but when I get back to the site, and what's really weird is I didn't do it in my journal, so I'm actually a little pissed off myself about that. But I did strap on a Bitcoin short at like 20,000 before we left. Actually, I guess it was about a week or so ago. God, I have no idea how to zoom in on this thing. I'm using one of the other gentlemen who is here with us, his Apple computer, and of course, I've never really been a big fan of Apple, so this is almost like playing with acid, having to try and use this product. But I know that's going to piss off a few people. Not that I like Mr. Gates any better, but what the hell. Anyway, so bear with me if it takes me a minute or two to pull up a chart. I was actually quite surprised. I think I've been telling you all recently. Let's see, I don't know. Let's see if I hit that button. That I had actually a Bitcoin short going heading into this trip, and I don't know how the hell it happened. But you see down here, this is a 4-hour Bitstamp chart, and of course, when I get back to Vancouver, I'll show you. I can't show you here because this is somebody else's computer. But I actually got a fill on Bitstamp at like 18,200. How the hell did that happen? No idea. But anyway, account balance went up, and that's really all that matters. Somehow I was given the fill. I don't know whether it was real or not because it was in my SIM account. It was more a demonstration trade than anything else. I think on balance, of course, I think I did a video with you guys. So I guess it was on Friday, 2 days ago. And I had, let's see if I can do this. I'll probably totally butcher this. But I had, let's see, 33. Nope, that's not going to work. There you go, 33. Nope. All right, give me a second. 0.33. Nope. 0.33. There we go. And of course, 0.66. So there is the bot setup levels, thinking about trend continuation. I suppose we can. Let's see how I can do this. Duplicate clone. Draw that off of there. And then we will change these to 25. And then we'll add 50 in here somewhere. I'm probably putting you all to sleep. My apologies. Just give me a second. 0.50. Nope. 0.50. All right, and 66 looks like that's good to go. And yeah, so I went short here right about 20,000. Move stop to scratch level was hit when we dumped through these key lows. Move stop to trailing level was hit when we blew through 19,000. And I think I had said on like a public broadcast that had you taken that short, you know, if you started counting 3 high-low method, I think at the very worst, least, best, I don't know, probably should have been stopped out on those shorts at this level, or worst case scenario. Anytime I ever have my setups hit that move stop to scratch level, worst case scenario is you just get stopped out at scratch, and so fucking watch us next bus, next in 10 minutes, etc. But I actually got a fill here, and I'll show you guys, and I'll journal it and make lots of trade log notes. I don't know how the hell I got a fill here, but on my account it shows a fill at 18,000, like 195, really weird number. Then and I had assumed that that did not get filled, because you can see here on this chart, I don't know how the hell I got filled, but anyway, as you can see on the chart, I actually thought that my stop to scratch level was still working, and I would have been blown out at scratch. I think I did the video like right in here. But it turns out actually I got filled right at my profit objective. Go figure. So anyway, the account's all nice and happy. Then on Friday, I had suggested to you that it looked like to me there was, you know, we can probably even just replicate this. Hold on a second. And go come on you. So rather than going through setting them all up, I can go boom and go clone, and then drag that over here, and let's see, let's go backwards. I know this is awfully boring. Should I speed this up somehow, Josh? Yeah, no. This is baby boomer boring material. What are you doing? You're putting everybody to sleep, man. Should go Portugal! There you go. See, it's handy to have like a co-host that can banter with you. It makes this job a lot more fun. Anyway, so I'm just going to visualize this, but you can see roughly, we'll go like, is that about right? No, that's about right. So something like that. So we'll flip this around, and you can see just this lower time frame setup. We'll reverse that. And if anything here, this is a really good example of why maybe, you know, if you are trading the bot, maybe leave like an 1/8 or something of the trade on and leave that as stop at scratch, because you can see we should have been stopped out at AOC targets. How the hell I got filled on this order down here, I have no idea, but I'll take it. If I was using the exact same logic, I would have been stopped out completely here. But you can see in this case, it might have been worth your while to hold on to a bit and let it run a bit more. The only problem I have here is that, of course, a lot of noobs are probably coming in and buying up here. And I think that's kind of asking for trouble. You know, if we look at our indicators, you can see that MACD had a huge pop here. And as I explained, I think it was on the Friday show, my feeling, my hunch, my inclination, my knee jerk, my gut feeling, of course, you never know for certain exactly what causes these things. But my feeling is that as soon as the world got news of Queen Elizabeth's passing, it just sort of stopped the narrative. And then actually I've also been reading too, it looks like the Ukrainians are having some success on the Eastern Front, which of course is probably reducing sort of global anxiety about the big Russian bear coming and just starting up a new Cold War and, you know, a new world of autocratic rule. I mean, yes, I know there's going to be plenty of people that say they don't like the bankster-run system, but the one thing I do like about the bankster-run system is clowns like me get to bark away. You know, as long as I don't say anything egregiously offensive, this whole sort of freedom of speech concept still sort of muddles along. In Vladdy's world and Winnie's world, that just isn't the case. And you all know where a guy like me would wind up in their world if they took over. So I actually think to a certain degree, a lot of the world is a little bit happier seeing that Vladdy's being put back in the box. And actually, I even saw headlines today sort of saying that there are Russian politicians that are actually having enough guts to come out and start calling for Putin's ouster. I wouldn't be surprised if they're asking for trouble doing that, but nonetheless, congratulations to you for having guts. And, you know, we'll see how this thing goes. But from what I understand, the Ukrainians are having a bit of success. And so as a result, I think the world's breathing a little bit of a sigh of relief. In fact, probably we'll see that in energy prices. Let's see. I think I tried to do this on Friday, but it didn't go very well, but I'll try again. Here we go. We'll go boom. We'll go, why don't we go make a copy? And then that way, hopefully, all of the similar settings will be there. And we'll go look at something like the crude oil price. Let's see what crude did on Friday. CL1 exclamation mark, bang. Well, crude did have a bit of a pop-up off the floor. Well, got a bit of an inside bar reversal there. Keep in mind that this thing is trading New York futures trading hours. So yeah, a little bit of a sell signal there. So we'll see how that plays out. Keep in mind this is a 2-hour chart. On your daily chart, really, and this is what I've been thinking about risk on assets. I get the impression that the world is just insanely negative there a week or so ago. And you know, a little bit of reprieve. Actually, good thing to see. You can see we got a nice little W in OBV there. In fact, that's actually an on-balance volume divergence. You see that price made new lows there, but the OBV indicator did not. So that's actually a little bit of a tell that things could perk up. You can clearly see we have lots of moving average resistance above us. Interesting to see how the 13, 30, 200 all stacked up nice and negatively. The trend is definitely down, and we are doing nothing more than just bucking that trend and running into resistance levels on the upside. You can kind of tell, you see this little wick right up here, it's a shooting star. And what a surprise, those highs are right into that moving average. So, you know, probably find a little bit of resistance, then we go sideways for a little bit. And that might create an inverted head and shoulders, which takes us up into this neckline. And then we do a shoulder like here, over here. And then we'll probably be getting into the fall. And then we find out if there's some sort of crazy Russian, counteroffensive, and the pendulum starts swinging back the other direction. So crude enjoying a bit of a dead cat bounce. This is what's that low? That low there is 81.50. This low here is 81.20. So at best, next bar, so Monday, we'd have to see price tick up through these highs. That would create a 3-bar fractal, actually a bit of an empire. And that would sort of confirm that, yep, for the short term, we're heading higher. I haven't seen that yet, so wait for that, see what happens Monday morning. And like I said, if we find out that, oh, hugs and kisses, Russia's actually suing for peace, who knows, maybe Putin's assassinated, who knows. You might actually find that crude even like gaps lower. So we'll see. Keep your eyes peeled there for Monday morning. That's probably going to be a really interesting tell. Actually, something that we noticed, what the hell was it? On the screener, things like the big US retailers are actually trying to turn back up. And if I'm not mistaken, I think the TRI screener spat this up as a buy. And frankly speaking, I look at this chart and it's absolute textbook. I mean, you literally can't write a buy signal any better textbook wise. Now, I can't, well, I suppose I could and I will because I'm just a pain in the butt. But here comes my big but. Gonna put all the TikTokers to sleep, but baby boomers will love this. Give me a second to load this all up. Oh, we'll go down to there. And then we'll go up here. Okay, so you can see how this move off of the high back down to the low. This is backwards now. Settings. Oh. Reverse. This is where everybody hits 2 times speed. All right, so 66. I've actually gone beyond bot setups, but hopefully you can visualize this. And again, just because you love me so much, I'm gonna slowly build this out. 61.8. And then we'll go 78.6. Let's see if the peanut gallery is with me. What do we call this area between 61.8 and 78.6? All right, so thanks, Josh. You're the only one paying attention. Notice, hey, look, nice little bottom right through that window. Nice 1 lows, 2 lows. Geez, look at that. Looks like even a Q reversal bar right in there. So if you're looking for reasons to buy down in that reload zone, yep, look at that. Now that, friends, take a screenshot of that action. That is the definition of a key reversal if you've ever seen one. Look at that beautiful bar right there. And interestingly enough, this little candle right here, nice inside bar. This is what I would call the bull bear battle line. So quite literally, whoever wins this battle, if we go up through the high, then that's a buy signal. If we go through this inside bar low, that's a sell signal. Since this was a key reversal, in a weird sort of way, this is like a double buy signal. When we break out through the top here, we're confirming this bull flag, and we're also confirming this massive key reversal. That is a huge signal right there, folks. Take a screenshot of that if you want to learn something today. That, my friends, is something worth learning. So there it is. And of course, if you were just charting this away, and I mean, I know a lot of you are going, geez, it's so easy when he does it, in hindsight. And trust me, hindsight's always 20/20. So I'm not going to say this is easy. What I'm just going to simply say is, see if you can replicate this kind of thinking when you're doing up your price charts in real time. So if we were thinking trend lines, we go settings. And actually somebody even said, if we can get this, campus idea off the ground, then you can actually come to Portugal. And this place we looked at today was so huge. We could have like literally probably 20, 30, 40 people stay on the property. And we can do this stuff in person. Then you can go off, on trading day, work away, and then come back to the classroom, and we can review what you saw through the trading day in the evening. I tell you, sky's the limit. Okay, so what I wanted to do here was go extend right. Well, yeah, something like that. Okay, so there's our trend line coming down, 1 tag, 2 tag, 3 tags. Rule is, of course, we want to see a W on the other side of the trend line. That's why you can't really take this trade, because notice it worked, and then, oh my God, I've lost everything, I'm a loser. Then it comes screaming back up, and there is your W right in there. And that, I think, is your buy signal continuation pattern. You could do A, B, C, D, and measured move. Looks like that almost hit that exactly right up there. We can start seeing now we're getting overbought. Looks like bear divs trying to come in. But the point I guess I'm trying to make with this particular chart So that's a pretty darn powerful reversal down there. In a location, that's where you want to be hunting for a location, where you want to be hunting for those reversals. And the question is why? And I think the answer is specifically with retailers, they carry a lot of inventory. If you don't know this, write this shit down. I know you are all, of course, especially TRIers. It's so cool. I don't know whether we have it here. I'll look on Andre's, but it might be embarrassing. So let's see what happens. It's always fun when you try and do this stuff on the fly and see if the technology works in real time. So here we go. Boom. Well, we're going to go take a look at Andre's journal. Oh, look at that. He wrote something way back about 10, 15 years ago. So good for you, Andre. Nice job. Anyway, this is great stuff. Like if you're a site member and you're like, if you wanted to do a journal entry of what did I learn in the broiler chicken show today, that would be just gold. That's what you're all supposed to have your journals out in front of you. Because we drop little bombs, or I guess I drop little bombs in the toilet, but that's another conversation. But we drop little bombs like this that, why do you think this retail stock is moving higher? And I believe the answer is retail stocks carry a lot of inventory and they have a huge overhead. Just think of how many Gap stores there are around the world. And do you think that they actually own all those properties, or do they lease them? If they lease them, do they rent them? Do they own the actual property? Is it mortgaged, i.e., and all of this, of course, has to do with one thing and one thing only: what's the cost of money? So, like I said, in your journals, you want to learn something new, never heard this before, write it down. Retailers are highly, highly interest rate sensitive. And if interest rates are expected to turn the corner, then quite often the retailers will take off. And that's, I think, actually the main reason why you're seeing that happen. So always a good idea to pull up the 10-year US Treasury. 10-year US rates, it's usually a pretty good benchmark for sort of medium to long-term interest rates. There's the ultra 10-year US Treasury bond. And lo and behold, look how we just came down, filled in a gap so perfectly. Look at that. And actually, we're just flirting with filling it in. But you can see, look at the bull div that's starting to form here. Look at Willie. What's Willie right now? Minus, what the hell does that say? 87? Is that right? So that, my friends, I don't think that's right, though. Yeah, well, I guess that says, yeah, I mean, ridiculously oversold. RSI, just RSI alone, sitting at 32. Usually a rating below 30 is oversold. So, and then if we like sort of zoom out, and this has been my thesis, and actually we had an interesting conversation, a site member and I just the other day, talking about interest rates. I get the impression that the Fed is going to be raising interest rates, and they're going to be rising, sort of actually flattening the yield curve right now. So the key that the Fed has actually won this war on inflation is this thing will stop going down, it will put in a W, and it will start to go up. And as I said, the big, especially big retailers like the Gap, that's what GPS is, they have people on their staff. I mean, keep an eye on it, it's pretty big companies. So they have people on the staff that are watching interest rates, and they're watching, Fed policy and the effect on the yield curve and what the anticipated move of the economy is. And if they start to see tells that indeed the interest rate market is pretty much done going down and should start going up now, I guess the interest rate market itself is done going up and maybe should start, either leveling off or maybe even, heaven forbid, actually go down, then, their professional traders are going to know about it. And it will be reflected in their stock really quickly. Also, too, did hear quite a bit of chatter about how the Gap has a marketing plan that's really targeting sort of classic American icons and not over the top spending, relatively conservative spending. The Gap isn't known for it's not like Louis Vuitton kind of thing. So I get the impression that their marketing campaign, back to school, all that really resonated well with the average American, average North American. I'm not quite sure how big Gap is in Europe, but I'm hearing that and sort of, Buy America. I think the American economy itself is actually pretty strong. So put it all together, and I think it's actually a potion for success. So it doesn't surprise me to see Gap trying to bottom. And then the other thing that I would mention with regard to this, but it just slipped my mind, damn it. Wow, it'll come to me in a few minutes. But, oh yeah, that's what I wanted to mention is look at the size of this weekly bullish divergence. So clearly the market is sniffing out that, hey, you know what, maybe the down is it's too much. We got to start going up again. So put it all together, I don't know whether I necessarily have a buy signal. In fact, I can absolutely say right here off of this chart, no, there is no buy signal here. But based on the fact that GPS is looking the way that it is, I believe it's telling us that we're probably closer to a bottom than a top here. That's probably the way I would look at it. So that kind of jumped out at me as something that, and the great part about this is, guess where I found out this this idea? Oh, off of our trade signals page. They says this is a great place just to go sniffing around. What are some of the areas that I might be interested in throwing some money at, right? And you can see daily bullish key reversals. You ever heard that Beamish guy talk about reversals, key reversals? There it is. That's a hugely powerful trading concept, tool, reason, price, even I think you call it market structure tool. Interesting to see financials, American Express moving up on momentum. Kind of mixed bag here. I don't think anything really jumping out. Interesting to see healthcare stocks weak. So, this is also interesting too. Kroger, that would be a good example of a conservative defensive stock. They're a grocery chain, and usually people invest in grocery stores and stuff like that when the economy's not so weak and people are spending money on, food rather than Louis Vuittons. On the bull side here, some interesting bottoming action. Ava's Budget Group. In fact, actually, I think one of the kids at our meetup here, she used to work for Ava, if I'm not mistaken. Carnival. Interesting how the cruise lines maybe finally are bottoming out. We've been watching the cruise lines for quite a while. And I suppose you could argue it kind of feels like the whole coronavirus thing is yesterday's news. It's tragic the way my country and, of course, substitute drama teachers, the whole story. They're really behind the curve, I think. I'm over here in Europe. You wouldn't even know there was something called Corona. It's not even an event. Let's see what else we got down here. Advanced Auto Parts, isn't that interesting? So that would be a pretty big retailer. Ingersoll Rand, I'm not quite sure what they're involved in. Regeneron. Isn't that interesting? Regeneron, that was Donald Trump's play, eh? Isn't that what he was hyping up that thing? That'd be interesting to see how it's done in the aftermath of him getting wiped out. So actually our chart doesn't go that far back here. Let's see, can we do? No, we can't do a weekly chart. Anyway, you can see Regeneron had one hell of a breakout here. Interesting, there was the reversal bar. It never did confirm, but at least the reversal bar was pointing in the right direction. Wow, huge move. Interesting to see what the news was that drove that. It's probably not something I could actually trade though right here. Let's see, how do I hit the back button on this thing? How do you hit, because notice, look at that, I tried to hit that, there is no, actually I guess it opened up on a new tab. I'm half talking to myself here. Let's see. Weekly momentum signals. Financial stocks. UPS. Isn't that interesting? Remember we had that weekly key reversal on Fedex a while ago. So now we're getting bullish signals on this United Parcel Service. This would be, that's a weekly signal in there coming in. So the trend is trying to turn back up. Pretty good looking triple bottom there on that stock. So, it's probably not a trade setup that I would like pull the trigger on today, but it's good, useful market information. There's Fedex. Look at that. Weekly bullish key reversals. It was so big that we actually printed it twice. Not quite sure how that happened. Let's see what happened. Oh, it's trying desperately to hang in here. Oh, interesting. Fedex. So kind of just still sitting right at that buy level. Not really doing a hell of a lot, but good to see that the UPS has moved higher. I guess you know what these guys are probably waiting for? They're really waiting for that crude oil to break. And I guess that would make sense. They're pretty dependent on fuel prices. Let's see. Some of these signals are coming in from a while ago. Canadian stocks. I don't know whether we're really interested in that. Oh, isn't that interesting? Look at that. So pot stocks in Canada are trying to turn back up. Ooh, look at that chart. 200 SMA sitting up there at $4 and it's sitting at 2. So technically, I don't know whether that's a double bottom or not. Sure looks like it, I know. And actually, the double bottom's actually already confirmed. That's not bad. If it's still sitting there a week or two, when I get back from my trip, I might take a real good look at that one. And also all the other pot stocks. Momentum here, not really anything to write home about. So maybe we'll wait for that to clean up a bit. Okay, let's see. Anything else to get excited about here? Enghouse Systems. I wonder what the hell that is. National Railway. Isn't that interesting? So big Canadian railroad stock rolling over. I guess that's like an industrial name. So outside downside key reversal there. It's probably not a trade I'd be interested in, but it's interesting to see it come up. That doesn't really look very key reversal-y. Maybe that was some other signal. Let's see, what was that signal? That signal was where we are here. Daily momentum push on volume. Beg your pardon, no key reversals there. There's Aurora Cannabis again. You know, if anything, you guys have heard me, you know, the little old lady strategy, risk management strategy. This isn't then sell halves on doubles, nanny nibbles, all that with Grim and stuff. This is probably a pretty good example of that. You know, we got a rally back and we saw this exact same thing happen a year or two ago. God, what the hell is the name of that trade? Anyway, there was one name in particular that I actually had bought some calls on in March, April. They were leap options, and into the summer, the stock tanked. By the time we came out of the summer and we actually started rallying into the end of the year, the pot stocks all started to come back in strength. So there's a name. Might even be worth taking a look at something like a bull call spread on something like that. Let's see. How could we do that? Let's go. I like to use bar chart. I think they have pretty good options data. I mean, you can use your local broker. Probably better. What was this? AUR? Aurora Cannabis? Yeah. ACB. This is the US stock, so obviously US options can be a little bit different than Canadian. Let's see what the chart looks like, just to make sure it still looks the same. Do you see the chart? Yeah, I'm talking to you. Do you? Okay, Brian's nuts. Just actually, I was just seeing if Josh was paying attention. He's like, uh-oh. Oh, he's lost it. Oh boy, there he goes. Big hugs and I think he just blew me a kiss. What a sweetheart. Actually, that sounds like a kiss from Liam. All right, so you can see there is the double bottom. Jesus, look at that. That's a 1 low, 2 lows, 3 lows, 4 lows, 5 lows. Jeez, that's a hell of a lot of lows. We would call that a narrow sideways channel. And they always say the longer the channel, the bigger the run. So if this thing is really expecting to break out, you could almost take a line and draw the line from this breakdown all the way to here and then just roll that line up somehow. And it will give you the upside objective. And the longer the channel, the bigger the run. Also, too, you could probably just draw a nice little trend line off of these peaks. And that probably tells you where it wants to go down the road, something like that. I'll extend that out. So something like that. So maybe something like buy the $2 call, write the 250 call. If you could, well, maybe even buy the $2. No, maybe buy the 250 call, write the 350 call. So if you bought that at like say 50 cents and you wrote the 350 at like maybe 10, 15 cents, that'll cost you like 25, 30 cents. And if the market does go up to these old highs, fills in the gaps, all that kind of stuff, you should be able to get a double out of that trade. You know who would really like that is probably Zach, our level 3 instructor. He loves bull call spreads. So that's probably something to take a good look at. Let's see, how do I open this in a new tab? I think it's that one. So, and what do we, according to our chart, this thing's going to go back to $8. That's a long way. So if you do the 250, 350, you're trying to collect a maximum of $1. Let's maybe even go out to something like maybe December or something like that. Give you a little bit of time. Maybe even the leaps. Let's see, where's the leaps? There. So you're going to buy the 250s. So look at that. There's dirt cheap. You buy the 250s. That'll let's pay the offer, 15 cents. And you write the there is no 350. Oh, damn jerks. Okay, well, let's try this differently. Let's buy the $2, even better. So the ask right now, 22 cents. And then we're going to write the $3. So you're going to collect 10 cents. The trade costs you 12 cents. And if the market does go up to that $3, and remember, we're looking for a target of $8. So if the market goes above $3, you paid, what do we say, 12 cents for the trade, and you collect $1. That's not so bad. What is that? It's like an 8-to-1 risk reward, eh? That's some serious money. I bet you Zach would like that. So Zach, PM me on this site and let me know whether you like that trade idea. Maybe, you know, that's even a trade we could probably slap on our joint account, Zach. So seriously consider that. It's pretty cheap. Anyway, there's food for thought. And actually, that's pretty contrarian, right? Is anybody interested in the pot stocks right now? I don't think so. So I always like to take those contrarian trades. In fact, I was even talking to somebody the other day. If you walk down the street, and I don't really care what city you're in, could be London, could be New York, could be Vancouver, and you just ask people, what's your number one concern right now? And, you know, I mention this because I got to tell you, there was the most beautiful example in crypto. And I love the guy because I actually really like the guy. He's totally cool. And his songs are funny and they're very well written. So I'm not dogging him at all. But like this Remy guy, he is the absolute most perfect contrarian indicator you will ever find in your entire life. You know, for example, and you all know this because you're Bitcoiners. He wrote the Bitcoin Billionaire. Of course, you're not allowed to watch it, you know, copyright, all that crap. But look at the date that he published that video. And somebody go and tell me within how many days or weeks from him publishing that video did Bitcoin top? It's like within like literally, I don't know, 2 weeks. I mean, ridiculously how close. Okay. All right. So, okay, fine, Brian. Maybe that was just a one-off. But how about this one? He just did this video on Dogecoin. And April 29, 2021, he did the video on Dogecoin. Somebody go out and put it in the comics. Hit the like button. What are we supposed to say here? Post a comment, hit the like button, subscribe. That's right. Ring. Well, which one? And actually, this is interesting. So, which one works better for the social media? Ring Colleen's bell or ring Brian's nipple bells? Daddy Beamish bell. There you go, Daddy, but not the nipple bells. You don't like that, eh? Well, don't tell me. What do they call those? There's a name for them that the strippers wear, though, isn't it? So that's what I want you to ring. Or why not just join the damn site? Isn't that what you're supposed to do? Anyway. I mean, I love the guy. He's great videos, very well written, really awesome. And the irony of it all is, what is the video that this gentleman just recently produced on YouTube? And I'm not even quite sure how you even go about finding it. But the most recent video that I saw he produced was on inflation. Enter. He did this money printing one recently, and the irony of it all is I think the days of money printing are over. That's actually an old story. It's not really new, and it's not what's going to happen in the future. Of course, everybody looks at the past, and they always think that what happened in the past is what's going to happen in the future, and actually, you couldn't be anything further from the truth. So I just noticed, and I put out, hey, there we go. Oh, we're probably not supposed to play that. But I noticed that his latest video was on inflation. And if anything, it makes perfect sense because, you know, he is selling a product to the public. He wants the most videos possible. So I think that's what this is. There we are. Spice Girls inflation parody. And you see September 2nd, 2022. So my hunch here is that is about the absolute best contrarian indicator you're going to possibly get, that this is the ultimate peak of this quote unquote inflation push. And, you know, I hate to say it, folks, but, you know, you all think that this is some sort of crazy inflation spiral, and frankly speaking, I don't think it is. I mean, I do like the fact that it gives me a reason to shit on fucking substitute drama teachers who have no business running countries. But in reality, what's going on here, and I don't know how the hell I'm going to show you this, but maybe if we can show you like a monthly price chart, is this is really more a function of the interest rate actually quote unquote normalizing versus how did he do here? How do I get, is it monthly? There's weekly. I don't know how to get a monthly chart on here. What happens if I go down? Oh, fudge. How do you get a monthly chart on here? I wonder. Yeah, I got all the way up to weekly, but nothing further than weekly. And you know, I like to show you these. Look, do you saw it? I didn't see it. I saw down here 9 days, 1 week, but I can't. 2 days, 6 days, 9 days, 1 week. Maybe I can, oh, hey, look at that. I can scroll down, yay. There we go. Okay, so let's see what happens if we do there. There we go. So, I mean, let's get rid of this. Oof, there we go. Like what I actually see happening here is horizontal line. Something like that. So ironically enough, this is the US dollar though. That's not exactly what I'm trying to show you. Let's try that again. Actually, you know what? Why don't we look at the actual interest rates themselves? That'd be kind of fun. TNX. Well, there we go. 10-year treasury notes. All right, so this is a 3-month chart. Now you tell me, are interest rates at all-time highs? Come on, folks. Let's call a spade a spade. All to the no. All right, we got one answer. I don't know if anybody else answered. But thank you, Josh. You're a scholar and a gentleman. And you notice if I draw that horizontal line off of that high, and that key low, you see, boom, there we are right now. So, you know, ironically enough, as traders, one of the first things that you learn, and we used to call it, first off, when I was at the prop firm, we called it the Nebraska trade. Then when I first started this program, we had a guy from Argentina who really liked this trade. So we called it the SFU, Sebastian, you can use your imagination trade. And then we had recently a gentleman who's very active in our day trader group, and I love working with him. I think, man, he's just put the time and effort in. I think he's got a pretty good idea how this trading game works now. We call it the Craig FU setup. And actually, what I like to do often with you guys is I will actually name these setups after you guys, especially students, not people in public. Because, you know, half the reason why, if you really like the setup, I want to make you famous. You know, I love working with these students. I love empowering you guys. And if you guys really like working with the setup and you see that it works and you like to be a demonstrator of best practices, I love giving it your name. So that's why I did what I did. But the point here is we actually train people to hunt, to actually short on a break of that high and to short on a break of that high. In essence, kind of like here, you see the market ran up to that high and you go short here. And you see what happened right after that event. So I'm not necessarily saying that this is a trade that I would do here per se today. But does it not make sense that we're coming into this high? I often tell you guys, look left. And then if we actually look down here, you see that the old key support is that low there. So we're right up against the top end of the range, and the bottom end of the range is really down here. So I would say that, you know, if this thing, and when this thing does roll over, the odds are it's probably going to come back down into these moving average support. And, you know, this is a wicked long-term chart. If we look at a shorter-term chart, hey, what letter of the alphabet is that starting to look like? Do we have confirmed bearish divergence? You can see there was the strong momentum push. There was a push to new highs in interest rates, but look at the momentum. It was nowhere near. And the interesting thing about this is you notice we're brushing up against these old highs, and the momentum indicator is just coming up and kissing the zero line. I mean, that's nowhere near these old highs. So this is wickedly in divergence. Willie was stupid. You can see the RSI div. So put it all together, you know, my hunch, believe it or not, now we're down on the weekly chart, but my hunch is we probably have to come back down and do a 50% retracement of that move. And that's all that's going to do is just tag the 200 SMA. And of course, that implies interest rates are coming down. And we all know that inflation's run away. Interest rates will never come down. What? Something doesn't make sense there. So you can almost see the contrarian trade set itself up. Now, could they push this thing up to another high? And then, you know, my friends in Romania, who I love so much, with the double Ds start coming out of the woodwork? Well, maybe. Where's Eddie? Eddie, did you like that one? Are you here? Oh, he fell asleep. Anyway, that one goes out to my Romanian friends. So anyway, the point of the matter here is I do believe, and of course, you know, whenever you listen to Brian, half of the time Brian's going to tell you something exactly opposite that you heard on CNBC. So it's like, just remember, Brian's usually right, and my hunch is that I believe that I'm right here, but I'm probably still a little bit early. And I think what happens here is that this nonsense goes on into probably first quarter of 2023. Fed's going to crank rates up in September again, so that should knock the market again. You know, you all know what I think is going to happen to the corn here into the end of the year, at the beginning of 2023. 23. I think the same thing's going to happen to the stock market. So enjoy the counter trend rally while it's happening. This thing then probably first quarter of next year, which really isn't that far away. You can see that'll happen right in here. We M out, and then we start the process of coming and doing 50% retracements, 200 period moving average tags, tag this long-term trend line, et cetera, et cetera, et cetera. So that's you know, hopefully what you see on that gap chart is sort of the exact opposite of this chart. And I can't remember exactly how we got down this vein of conversation, but I am thinking that we're getting near the end of this interest rate move higher, not the beginning. Actually, you know what? Probably a really good anecdotal evidence. You want to know exactly when the interest rate market will shift. It will be when this euro dollar market actually breaks. So you can see, and this is a case where when price is rising here, so you see euro, actually this is the, what the hell is this? Euro US dollar futures. Oh, that's not what I want. Knucklehead. What the hell is the euro dollar contract? And actually this is interesting too, you know, maybe before we leave this conversation, hopefully you can see what's happening here is we have Willie super stupid. We have a bullish divergence in MACD momentum that has been confirmed. Actually, you know what? This is this looks like one of Julian's price channels. We can go probably there to there. And then drag the channel back, and hello. You see that? See how cool that is? Maybe we should print this off and put it in Julian's stocking for Christmas, because that's what I think is going on here. Maybe Eddie, I don't know, that's pretty loud. I don't know, do you mind? Okay, well, I'll stop and just wait for Eddie to finish here. You almost done? All right, so you can see bottom of the price channel, Willie stupid, confirmed bull div. You know, I hate to say it, but if these moving averages start crossing up, which would probably happen on a W, I think you might want to go buy yourself some euro calls. Well, it looks like the euro wants to rally back to about 110. That's probably on like the gap stores, because this rallying here would be a risk on proxy. Stock market should rally. You know, I don't have my whole matrix set up here, so I can't show you how all those are correlated. But this would also imply probably things like the commodity currencies would be moving up. Probably, and it's interesting with the Canadian dollar, right? With a crazy socialist in charge there. Do we actually get a bottom in the Canadian dollar here to go along with that? I don't know. You know, the issue here, of course, is it's highly correlated with oil. So I don't know whether I see such a powerful move here. In fact, actually, I don't see really much of a bottom. You see a little bit of a MACD div trying to form, but geez, nothing in OBV. And Willie's just parked. No, actually, Willie's not even stupid yet. So he could still work his way a little bit lower there too. So no, I don't think it's going to happen in the commodity currencies. I think it's going to happen in the euro. I always thought the euro was EC. What the hell is that? EC euro Canadian dollar on the Moscow exchange? What the heck is that nonsense? Anyway, what did we say there? ED. Isn't that interesting? So they must have recently changed the symbol, because ED used to always be euro dollars, and it was the short-term corporate interest rate instrument. Okay, so interesting that the euro currency, which is kind of a side treat, you know, we wasn't really expecting to talk about that, but interesting to see how that is potentially setting up a trade there for you folks. Back that up if you're interested in trading currencies, because I'll tell you, that's a pretty good walkthrough of a trade setup there. All right, so here is our euro dollars, and this is what I've been talking to you guys about all along here. This is the corporate market, and you know, let's just back history. central banks technically are a relatively small player in the marketplace. They have been always deemed sort of the lender of last resort in the market. But the problem is that the market is way too big for any one individual. You know, there's a famous story that JP Morgan came in 1910 and the stock market was just in free fall. And he just kept buying and buying and buying and buying, and he eventually put a floor in the market. And ironically enough, JP Morgan himself actually wasn't that wealthy of an individual. And we found out later on that actually that was the Rothschilds taking over the US stock market. So there was that example, but a really good example of failure was Durant was the original CEO. He actually built General Motors, and he bought up a whole bunch of small motor companies. And he tried desperately through 1929. He just kept buying and buying and buying and buying, and eventually actually he went bankrupt. So it's just a good example that no one individual, no one institution is really stronger, deeper than the market. I do believe that the JP Morgan story was a trap, and it was set by the Rothschilds. But that's, I suppose, a conversation for another day. The point here is that this is actually the real short-term interest rate market. It's called the Euro-Dollar futures. And this, and you know, if you watched any of my old broiler chicken shows, I show you the Fed spread, we like to call it. And it's the difference between the Fed funds rates and now the euro dollars market, because the US T-bill market, you know, US government went bankrupt there in 2008. So the federal funds had to take over guaranteeing short-term interest rates. And the Fed actually didn't do anything for the longest time. And then finally, the euro dollar market actually broke there in November of last year. So you could argue that the market in November of last year was telling us, hey, this inflation is now starting to turn into a problem. And go look in your, you know, in your history. When did the Fed actually start raising rates? I'll tell you that it wasn't in November. So, and this is, of course, the big criticism of the U.S. Federal Reserve. And I'll tell you, these guys are looking like idiots. You know, the guys like Druckenmiller have been making fun of Powell because he completely fucked this up. You can see that the Fed funds, they didn't start acting until February. So quite literally, they let things get completely out. They did nothing for like, what, 3 months. And the market, I mean, you think about that, 90 days in the market, 90-day T-bill. I mean, it was almost like literally a full quarter cycle. And they did absolutely nothing, and they didn't act. And you can see that when they finally did act, they actually had to play catch up to the euro dollar market. So really, the bottom line here is I think the market has kind of lost faith in the infallibility of the Fed. And I think the market's actually more watching this market because this is basically the whole market. This is the corporate interest rate market. And if and when it bottoms, then I think the market believes that, okay, the Fed has gotten in front of this inflation problem and the cost of borrowing doesn't need to keep increasing to try and slow spending. And it's almost like the market itself is actually trying to act here by cranking the cost of money up because the Fed just completely dropped the ball. Do we have a bullish momentum divergence in here? This is sloppier than slop. I don't think so yet. You can clearly see Willie is just absolutely stupidly oversold. You know, all the RSI fans sitting at 15. That should scream something to you. Do you go with this double bottom here? I actually think I'd like to see a little bit more constructive action. And then going back to our thesis that, you know, this probably turns up sometime in that probably second quarter of 2023. Yeah, that would give this enough time for MACDs to start putting in divergences. And then ultimately, once that divergence is confirmed, then we see price actually put in a bottom that you can trade and take a position on. Probably by the time this all happens, this medium-term moving average will have come down, and the short-term moving averages will have consolidated and turned back up, and you get your moving average cross signal as well. So for those people interested in the interest rate market and when are short-term interest rates ultimately going to turn, and that will be the sign. In fact, I was talking to a guy last night, same thing as I was saying earlier, wondering, you know, number one, are interest rates going to go up indefinitely? And I don't think the answer is yes. I think actually very shortly, especially if the Fed goes and cranks rates up here in September, within 3 or 4 months, I think the market's finally going to break, and it's going to just, you know, the economy itself will start to contract, just because, you know, in Canada, for example, 54% of all house mortgages are adjustable rate mortgages. And, you know, the banksters, they usually get people to buy like 2-3 year bonds, kind of, or, you know, mortgages kind of idea. So at some point in the not too distant future, Canada, as a typical proxy of an over leveraged country, it's going to break. You know, the writing is on the wall. So it's just a question of when. And here's the kick in the pants. I don't think it's necessarily that it's a crash. It's just, why on earth did a single family home in Vancouver that really is just a tear down, and it was on like basically a half-acre lot, why would the price of an asset like that go up to like $2 million? Which is just, you know, I mean, I've asked people this repeatedly, what's a typical sort of annual income? And then, you know, most people say, man, maybe like 50 grand if you're doing relatively well. And, you know, in this world now, the banksters insist that actually mom has to go get a job too. So what that means is household income is about 100,000. And they say that, well, typically, you know, you should probably spend about 30% or so on your mortgage, your house payments. So that's like 30 G's. Okay, well, you know, if a house is, I mean, keep in mind, these houses are garbage. They're really tear down. I wouldn't have my mother live in them. But if that's the house that the bankster is forcing me to live in, and it's $2 million, first off, where do I come up with you know, what do they ask for? They usually ask for about a 10% deposit, right? Down payment for a house. So that means I got to come up with $200,000 cash. Okay, maybe that's doable. That means I carry a $1.8 million mortgage. And if interest rates now are back at 5%, then that means that I'm paying roughly, let's say I got a 20-year paper, I'm paying roughly $90,000 a year in interest. That's not paying off the principal. Remember, the principal is 1.8 million paid out over 20 years, which is about 90,000. So in essence, I should realistically be able to pay $180,000 a year towards that house. Now, my annual income, household income, husband and wife are working. That income is, what did we say? So it was 100,000. We should be able to put 30,000 towards housing. So I should be able to afford 30,000 a year in payments. And to justify current retail or real estate prices in a city like Vancouver, I need to have that annual income of 180, or not the income, but the portion of my income that should go towards housing be 180,000. Houston, we have a slight problem here. You know, like the writing is on the walls. It's just so blatantly obvious. And really, there's only one solution. Interest rates really are not going to go down appreciably. We've gone through the interest rate cycle. So what's the solution? There's only one solution, and that's interest or prices of real estate have to crash. And actually, I really like that thinking, because I watched a video recently by our buddy Chico Crypto. Tyler. And he's still convinced that one Bitcoin will buy you one house in the not too distant future. It's interesting how Novogratz last cycle, Bitcoin was what, $2,000, $3,000, $4,000. And remember, there was that funny little video, Bitcoin, please go to moon. Novogratz says we go. No, that's not how it goes. No, Tony Vay says we go down to 1K, but Novogratz says we bottom it out. Bottom it out. And then Novogratz, and in the song, yeah, it said Tony Vay in Spanish, right? And he even says, oh yeah, Bitcoin could go to 40,000, no problem. Right? And so if you think about that same logic, right? Bitcoin topped out at 20,000, then did its correction, and through the correction, Novogratz is saying 40,000. Okay, so if we use that same logic this next halvening cycle, what was the peak that we just saw? Like 60,000, let's use 60. Nice simple number. If we use the same logic, where should Bitcoin go? 120? That sound about right? Twice 60, that was the same logic Novogratz used, 20 to 40. So if we use that same logic, I actually like the idea. 120,000, 130,000 for Bitcoin, top of this next cycle, makes perfect sense to me. And ironically enough, I think a nice single family home in the United States of America, I think you'd probably get it for 120, 150,000. I think right now the average house price in the US is about 300 and maybe 400. So basically it gets knocked in half, big surprise. Interestingly enough, of course, if the currency does break and the commodities markets break for a country like Canada, not only are you going to have the housing market itself break because the interest rate picture is a disaster. It's an absolute train wreck. Like I said, 54% of Canadian houses are adjustable rate mortgages. So if you have that same scenario, not only are you going to have house prices fall, but you're actually going to have the Canadian dollar itself fall as well. So if Bitcoin does go to 120,000 US, but the Canadian dollar heads down into the mid 60s, like the Australian dollar is now, well, then you can go and buy one house with one Bitcoin in Canada. And frankly speaking, I think that's actually that's not outlandish. The only problem is that I know all of you guys, everybody, you want this tomorrow. And I don't think this happens until probably 2025. Maybe the peak of this next cycle is December 2025, January 2026. I think that's completely realistic. So this is actually an interesting conversation that I had with somebody the other day. I can't remember who it was. To win at this game of investing, you have to think about that intermediate term picture. What does the market look like in 2 or 3 years? Not what the market looks like today, not what the market's going to look like 5 years from now, 10 years, but what's the market going to look like in 2 or 3 years? And that's a very, very difficult question for a lot of people to answer. You know, in this scenario here, I like the idea that the market and, you know, Remy and the public, they're probably for the rest of this fall and into the new year, inflation is going to be the #1 conversation, and it's going to seem like it's endless and it's going to seem like it's never going to stop. But I might actually argue all interest rates are doing is they're just normalizing. And now that interest rates have normalized, I would actually make the argument, probably the best prediction that you can have here is that interest rates are actually just going to oscillate between where we are now and the 50% rule probably over the next few years. Those people that took out all the mortgages and stuff way up top at the very, very low rates and could lock in for 20, 30 years, way to go. You won. It's damn difficult. You know, TRI CTO, he had to like literally pull teeth, but he actually got it done, and he mortgaged, he went and bought a new house and mortgaged it for 20 years. Ironically enough, now the market is trying to screw him because he got such a fantastic mortgage rate The market's trying to screw him on all the other costs for that house. So the market can't screw him on interest rates anymore. He locked it in. He won. So what's the market trying to do? What's Goldman Sachs trying to do? What's Joey Diamond trying to do? Well, they're going to try and jack up the cost of utilities on all the ancillary things. If he has to go and fix the flooring in his house, well, the cost of lumber to fix it. And of course, now because of the Great Reset and what Klaus's gift to the world, right? Now we can't find anybody who actually wants to go get a job because they're all going to get basic income. So now try and go and find the guy to actually fix the floor. And it's like a 2-year waiting list. So it's sort of like the banks can't screw the public on interest rates. So they're going to try and pull every other lever possible. Oh, what a coincidence. Some dickhead over in Eastern Europe started a big old fucking war. I mean, did he have to do this? I don't think so. But anyway, that's rhetoric. Probably more Brian ranting. So, point of the matter here, and of course, I would actually make the argument at these levels, should you really expect another big move higher in interest rates? Well, ironically enough, you know what this image is? This is the Bitcoin image. Down here, and like I said, I got my fill at my target. I don't know how the fuck I got my fill. I'll show you the screenshots when I get back. I'll show you the count balances. I don't know how the hell I did it. I was shorting up here. Okay, fine. But do I want to short down here? Well, you can see this is actually what happened. And do you think anybody caught this? I don't know. I mean, I think Julian said he was feeling bullish, so that's cool. And I'm sure there probably are people on the site that caught this bull. I personally thought that this was more of a dead cat bounce. I'm not long, and I'm not running any long setups right now. And of course, technically, I'm supposed to be on vacation right now. I don't think I really want to hunt a long setup here with the way that momentum's looking. I'd rather see this settle down and go sideways for a bit. And I think on Friday I told you about maybe what I would be thinking is right now, if we maybe let's go out to, I don't know, let's say a 12-hour chart or something. Yeah, maybe what we're carving out here is some sort of big honking inverted head and shoulders, which it'd be fascinating. This would catch everybody off guard, right? We're at, let's see how I can do this. There we go. I mean, keep in mind, we are a million miles away from the old highs. So even a rally of like 5,000 bucks right now isn't going to make that big of a difference. But I wouldn't be surprised, and this is what I'll be sort of watching for out of the corner of my eye here going forward. No idea if it's going to happen or not, of course, but I do like the idea of there to there to there to there to where we are now, then a nice little pullback right shoulder, and then a breakout. And actually that would be cool because that would align nicely with a breakout through the 200 SMA. So that's what I'm going to be hoping for, and you know, looking for going forward, hoping that, hey, maybe there's a long setup that can develop through here, because that would be super cool. And if we drill out on this, and it will assume it's symmetrical. So we'll go boom, boom. Too long, but let's go. Boom, boom. This is where TikTok. Actually, I think it's more where Josh starts to cringe. Oh God, it's slowing down. I know, Jesus. Now, what the hell happened to the? Oh, it's this button right here. What a doofus! It would help if I knew what button to push. Right? All right, so there to there to there to there. Whoops. And then let's just go and straight up. There we go. And we'll clone that. Oh, that's not what I wanted. Come on, baby. Oh, no. Come on, Barbie. Let's go party. Look at that. It's oh jeez. Problem is this isn't well. Okay, so there, bottom left-hand control panel down here somewhere. Left. Oh yeah, there you are. So down here, we can go clone. Oh, you're so smart. Thank you, Chris. That's cool. Oh, these guys have come out of the woodwork to help me here. Okay. Oh, hello. That's interesting. So, do we make this kind of consolidation in here? Can I get 3 higher lows? 1 low, 2 lows, 3 lows. Well, I'll get a bullish bot setup. No guarantees from the management here whatsoever at this point. Clearly, this is going to be a battle royale. In fact, actually, what I often like to call this is I will say this is a moving average sandwich, where the 200 period moving average is the top of the sandwich. The 30 period moving average should be the bottom of the sandwich. And the 13 EMA is the baloney. So you can kind of see how it's probably going to be bouncing around here. Now, if this is an inverted head and shoulders, you can actually draw a line right off of this left shoulder, and this will be your tell. If you actually start seeing the market close below, and see how I painted that right shoulder there originally, and notice, look how the 13 EMA is racing up to that level now, because the 13 EMA should act as support. So in essence, if we can basically do that consolidation, like I said, where we get something like down into the 13 EMA, then rally away, then come back down, right? You can start to see this developing, right? And then we get like 3 higher lows, and we got something to work with. And, I mean, just live by the sword, die by the sword. That's probably what I would be looking for here in the short term. And I suppose, this is the interesting conundrum about all of this, is we're kind of caught between 2 sort of market theories right at the moment. The first one is the decennial report. And that's like, this is actually one of Warren Buffett's favorite indicators. So probably another good thing to write down in your journal. But in essence, there's your decennial report. And it said that we were going to bottom sometime in the middle of the summer, which we did. We were going to rally away from the lows, which we did. We were going to come back against the lows, which maybe we're doing right now. And then we were going to turn around and just go absolutely ape shit to the upside. So in a weird sort of way, that Bitcoin chart, because remember, we like to think of Bitcoin as that leading indicator, right? If it goes sideways, it pulls back here, and it goes sideways, consolidates, and then breaks out. That's kind of painting that sort of, dead cat bounce rally scenario. So, oops, that would be like, we're like right here, we're going through this period right here. How does this play out? And then do we push higher? Well, maybe something like that. I suppose if we do have to M out like this, then probably what this thing does is it consolidates sideways, and then it breaks down. We don't get the 3 higher lows. The bullish setup does not come in. We M out, and we have to work our way back down and test the lows in earnest. Yeah. The other side of the equation, and unfortunately, I think just because I'm not a socialist and I would prefer this not happen, and this is kind of a danger in the market. A lot of people fall into this trap that, they want a certain scenario to play out, and so you actually start sort of, creating ways in your mind that that scenario does play out. Maybe that might not be the smartest thing. Let's see. How on earth am I going to zoom in on this thing? Andre, are you around? Andrea? No. How do I zoom in on this picture? Oh, thanks you, Andrea. Geez, Andrea, you've been in the sun? Okay, so this is, and you know, if any of you haven't watched this before, I mean, we're constantly talking about this stuff. It's probably been in at least a dozen different broiler chickens and site videos over the past months. So please, you know, feel free. Hey, join the 30-day trial. What the hell, eh? Let's see. Also, you know, we got school coming up next weekend. We're going to have our big meetup in Nazaré, and we should have actually a raffle to raffle off a free seat in our school. And actually, we got our latest new school member who just joined the crew here, Nadia. Hey, Nadia! Portugal! Anyway, back to the story. So here we are in early September. And unfortunately, second year new Democratic president, yes, we were supposed to jump out of early September. And yes, we have jumped. But you notice waffle, 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 and then, oh, Jesus, look at this. We actually just totally melt right back down against those old lows. So, and that's coming out of September. We should be playing with those old lows, and I don't even want to talk about what happens in October. So I'm kind of torn right now, right? If you listen to guys like Warren Buffett and Larry Williams and stuff, they will say that, yeah, we're supposed to come down, but because the Fed's gotten in front of the inflation problem, and you know, Frank and Remy's come out with his "Inflation's the End of the World" video. So that's our contrarian indicator that actually the public is thinking completely the wrong direction, and so as a result, that's probably what's going to happen. Is the exact opposite of what he thinks going to happen. Poor guy. And I'm sorry, Mr. Remy. I mean, I love you dearly, but I've seen this now 3 times with you, and you're a beautiful contrarian indicator. Thank you so much, sir. I love it. Yeah, good. Get everybody pile into TRI. Oh no. I know. I see. That's the problem. Is that should I sit back down? No, you're good. Okay. All right. Cool. Anyway, my butt was getting. I mean, I've got a big ass, and it gets sore really easily. So I had to stand up. Anyway, and then of course we've got the January barometer. I don't know whether we even want to open up this can of worms, but as you can see from the January barometer, oh boy, what a mess. And you can see sort of mid-year we were supposed to keep melting down, and unfortunately, back in January, the floor traders, they were not optimistic of this year. And you can see that we're probably going to tank into September-ish and then come back down and test those lows into sort of October-ish, and there's your U.S. election, and there's your eventual end of the year dead cat bounce rally. That actually looks a hell of a lot like this chart. And in a weird sort of way, back in January, all the pit traders and floor traders and stuff, they probably were looking at this chart and going, well, geez, this is what's going to happen. So it almost becomes like a self-fulfilling prophecy. So this is where it gets a bit tough, folks. I mean, any way you shake it. And they always say, right, they don't call it the fall for nothing. Ironically enough, we're actually not even into the fall yet. So, you know, the irony of it all is that we're doing what we're supposed to do, i.e. backing off here. The only question is, how deep does it have to go? I don't think it's a good idea to get into the business of predicting the future. Whatever's going to happen, that's what's going to happen. So the easiest way for us to not get sucked into the trap of predicting the future and then looking like idiots when the future makes us look like fools, why not just not put your portfolio into that kind of situation? And that leads to the idea that we don't trade opinions. Opinions are worthless. We trade setups, and setups are priceless. What the hell is a setup? As you can see on the screen here, a setup would be something like, I've seen the market when it jumps up and then it goes sideways for a little while and it puts in 3 higher lows. I can measure out this as a measured move, what we call an A, B, C, D in harmonics land. And based on the fact that I've traded this particular methodology over the years, I've noticed that roughly 60 to 70% of the time when I do get these 3 higher lows come in and I take the trade at the 25% level, which I don't really have on the screen here, but I'm just talking you through this. It works, good, 2/3 of the time. If you can get 2/3, God, you're trading God. And especially on the bot setup, because the bot setup pays you $3 if you are quote unquote right, but if you're wrong, you only lose $1. The irony of it all is, I always love to do this. Actually, this would be a good opportunity. Is there anybody even watching on the YouTube channel, Chris? Oh, that's not bad. So let's do a poll. I always love to do this. So let's see how long it takes. Let's see how long it takes for 5 people to answer the question. How accurate do you have to be to, huh? They're already answering. Now you guys here in the cheap seats, you're not allowed to answer. Anyway, if you get paid $2 on your setup if you are correct, but you lose $1 if you are incorrect, how often do you have to be correct just to be a scratch trader? I haven't made any money. I haven't lost any money. I am just trading setups. See, how long does it take to get the number? Do we have anybody answered yet? Oh, all right. Well, that was pretty quick. Excellent. Excellent. Well, people, if you're here to learn how to trade, write that shit down. If you're watching this video for the first time, please, please, please write that down. In fact, I was trying to impart this idea to somebody yesterday. The worst thing you can possibly do in this game is listen to somebody who made a prediction and then judge how good of a trader they are based on whether that prediction came true or not. And the problem is that this is the way the whole sales industry works. And when runaway bull markets get going and a guy is perceived to be quote unquote correct many times in a row because, hey, it's a bull market and he says technical analysis doesn't matter, just buy and you'll get rich. Well, eventually you just keep listening to the guy, but bull markets turn into bear markets. And then, if you follow that philosophy, great, you made a pile of money. And I saw somebody do this and I couldn't believe it. Somebody actually came out and said, don't sell half on a double when the asset gives you the opportunity to create a risk-free trade, and then you don't have to stress about your investment at all for the rest of your life. Buy more when it doubles. In fact, add more risk, add more anxiety, add more stress, because that's how you become rich, motherfucker. Hit my subscribe button, ring it, use my affiliate code. Woo! TikTok, right? The whole damn thing. And then, oh, gee whiz, a month ago, we found out that the firm just went bankrupt. And another person was telling me when the firm went bankrupt, the whole goddamn market, because keep in mind, crypto is a very small market, relatively speaking. So when these cocky ass motherfuckers who got everybody to FOMO buy, use your referral code, blah, 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 nonsense, when they eventually went bankrupt, that means the game is over, you loser. Get the fuck out of here. That's what bankrupt means. And of course, Josh doesn't like that kind of talk. Sorry, dude. I can't stress enough. Let's do another poll. How quickly can you answer this question? What is your #1 job as a trader here, folks? All right, well, somebody in the cheap seats answered quick. Do we get any answers online there, Chris? #1 job as a trader. Good. Good. I mean, you have to understand this, people. People blow themselves up and go bankrupt in this game of investing, trading, whatever the hell you want to call it, all the time. And on the way up, they look like geniuses and everybody loves them, and gold-plated steaks, hookers and blow. After the fact, you'll never hear from these people again. You just won't. They're just, and unfortunately, it's your hard-earned money. This is what you have to understand is they won't be held to account. If they're your investment advisor in Canada, they will be held to account, and you could actually sue them and get your money back. And probably a lot of people watch this go, "Oh, I didn't know that." But in crypto, this is the definition of unregulated markets, folks. And it's one of the reasons why things like regulators in this country, knowing that crypto is unregulated, and knowing, right, that the stock market business is insanely regulated, right? They can't do that. They can't, someone can't sue, take you to court, and the judge says give him his money back. Because in crypto, the judge says, well, this is an unregulated market. There are no rules here. You're tough poopy. Out you go. Goodbye. Case closed. So that's one of the main reasons why these regulators actually in my country have said, well, you can't put more than $30,000 into altcoins because it's just too damn risky because of things like Three Arrows Capital. It's exactly because of stuff like that. It's because of people like Do Kwon. Exactly like that. It's exactly because of that. So anyway, do as you please. If anything, the good part about it now is that the fluff has been taken out of the market. The bad part about it, though, is I don't think we're at cost of production. If we sit here at 20, 21,000, I know there's one guy on the site who's going to argue with this, me tooth and nail. But I think cost of production is more down around 10,000 right now. I like that number as cost of production base, somewhere in there. You probably see price in an absolute panic, dip down to sub 10,000. And what I've suggested to people is, and I don't think it's going to happen now. I think it happens like next March, April, or maybe even February, maybe somewhere around there. But get those stink bids working. And just be patient. If anything, the best part about crypto is we know that the halvening cycle is coming up. So usually about 6 months prior to the halvening cycle, that's actually when I suggested, all right, it's time to start backing the truck up. I don't think there's a hell of a lot of hurry here over the next year or so. I don't know. Anyway, it's my thought. What I'm doing here, going long, going short, is I'm just trading setups. And if you want to just trade setups and live with the results, you can compound your account nicely. The only thing I would suggest is try not to stay in crypto with your capital at the end of the trade. Maybe go to fiat, maybe go to one of these stable coins, quote unquote, if you believe that they are stable. Because, like Bitcoin itself here, it could easily get cut in half from these levels. I mean, it could. I'm not going to predict the future and say one thing's going to happen or another. But I will say that I do really like the idea of cost of production right around, somewhere between maybe 8,000 and 12,000. That wouldn't surprise me as sort of a base. And probably the way that you're going to really see that the bottom is in is if you start hearing people talk about 51% attack. That's usually the tell. I don't hear anybody talking about 51% attacks right now. Okay, so we talked lots about Bitcoin. We talked a little bit about the broader market, talked a bit about interest rates. In fact, actually, we even talked about the euro. Ironically enough, all the stuff that I looked at here tonight, I really like things like the gap, and I really like things like actually buying euro call options. I'm totally contrarian. I suppose we could take some time now and do some, I guess just free for all. How long have I been blabbing away here? All right, so I don't know, next 20, 25 minutes, huh? Oh, okay, that's an excellent one. So let's see. The question was, and I like the idea that why don't we spend the next 25 minutes let's just do a little Q&A. Let's see where Josh is taking us. We're going to talk next about, we have a raffle coming up for the level 1 program that starts here in September. In fact, actually, the program actually has to technically start the week of the week after, basically the week following the raffle, right? So you can see that the enrollment officially opens up there on in I guess 8 days, 7 days and 23 hours and 43 minutes. And 59, 58, 57, 56, away we go. All you got to do, as Josh just showed you, in fact, probably the easiest thing to do is just go to the Rational Investor website and just sign up for the 30-day trial. And that way you're in our community. You can listen to the daily briefs. I mean, we've got some fantastic instructors, fantastic site contributors. It's a really quality website, I think, in all honesty. I haven't really seen anything like this. This is the chat room. You can see this is a particular chat that Andrea is having. Here is the lounge, and you can see people are chit-chatting away. Hey, there's Cotter. Mr. Brian, I don't like your $20,000 cost or your $10,000 cost to mine Bitcoin. I mean, that's a load of horse shit. Hey, yes, so there you go. If you have a second, can we get an update on where you're seeing cost of production today? I can't do that here, Cotter, or I'm not quite sure. I guess she's asking Cotter that. Let's see. Rough guesstimate. So Cotter, if you could reach out to Sharktoshi, and I think actually Sharky might do a presentation on the daily brief while we're over here in Portugal, because he's down in Southern California. Please, 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 I'd love you dearly if you could. Sharky's just a, in fact, everybody should know Sharktoshi just got basically a promotion. So he's moving on up the scale. Golf clap, everybody. He's moving up the scale of TRI, moving from TA to instructor. Okay, so what I wanted to mention here, let's see if I can do this, but I seem to be, oh, hey, there we are. Oh, I'm on the blog. How the heck do I get over there? Okay, just give me a second. Okay, there we are. So on the TRI website, you can see if you just come on here, you can see the school is opening here soon. See our wait list here. If you just go to that page, and as Josh just helped me showed you, it is join.therationalinvestor.com, and just fire your name here into the contact with your email address. We'll throw you in the raffle, and as you can see, the next term starts 19th. But we'll have the raffle on that meetup, which is basically next week. I don't know how to show you the calendar on this, so you're just gonna have to take my word for it. I think actually maybe that's the calendar there. Let's see. Hey, it is cool. So yeah, we're gonna have a big raffle. We got the big Nazare meetup here coming next weekend. So we're gonna have the raffle, and the school enrollment officially opens here 19th, 20th, and this first week is an introduction week where you just spend the time just getting yourself all set up and ready to rock level 1. And you know, one thing that I was talking with some people here recently, and it confounds me, because I've been doing this for 8 years, and I'm actually really surprised that there's lots of people that will say, hey, I use this particular indicator, take my course, and I'll teach you how to trade this indicator and show you how I make millions of dollars with it, and you can too. And okay, fine. Okay, you know, squiggly lines are squiggly lines. That's not really the purpose of our education program. And actually, the gentleman who actually owns this beautiful place that we're staying at, he and I had a long conversation the other day. And what I told him was that, you know what my job here is, and this whole website experience is, I teach you how to play the game. I teach you the rules of the game. I teach you that you need to run this as a business. And you have to put away the personal egos. That's just a waste of time. And okay, fine. You can, I mean, you see what egos do to people like Do Kwon. You might, reach the top of Mount Everest, but then you might take one more step and you go tumbling down the other side. Well, that was a fun adventure. I mean, it does happen. It happens to a lot of people in this world. I actually like the idea that Do Kwon is today's Bernie Ebbers. So if any of you know who Bernie Ebbers is, I think the similarities are startling. But you have to be an old timer to know who I'm talking about there in the story. I'll give you a hint, WorldCon. Let's see if you're old enough to know what the hell that is. So what I do at TRI, and what we've done now for the past 8 years, more importantly, is we teach you the process. And as I said, I'm actually quite shocked that, I've had lots of people online blatantly copy this concept that happens to really resonate with them. Things like the little old lady. Jeez, I've heard so many different renditions of that. It's sickening. In fact, one time about 5 or 6 years ago, some site members had this one gentleman copied an indicator that I like to use, and they actually made a copy of his indicator, and they called it the copied Brian Beamish indicator, and really ground this guy into the ground. And I never heard from him again, so it obviously pissed him off to no end. So, but those are just individual pieces. What you get at TRI is you get the whole damn story. Where's the camera? Right, there you are. Hi. You get the whole story. You get everything from what's going on in the world. Does it even make sense what's actually happening? When you see stocks go up, you see currencies go down. Why are stocks going up? Why is interest rates moving? Why is that currency moving up? Why is that currency moving down? Believe it or not, there's actually usually a reason behind a lot of it. You get the idea that to actually win at this game, the most important thing is you have to get to a place of calm. You have to get to a place of low anxiety. I mean, yeah, you look at pictures of guys who are trading on the floor and stuff, and sometimes they're going a little bit ape shit. Usually those are actually the amateurs. But most of the guys you see on the floor, they're kind of like, man, it's just business as usual. You ever watch a movie called Trading Places where they have two commodity traders who go, one of them goes, hey, you see what's going on over there? Looks like the Hunts are trying to corner the orange juice market. Hey, you want to get in on that? Yeah, let's go. Right? So how do you act like that? Not like, oh my God, look at what they're doing. TikTok. Oh, and by the way, my marketing department director just gave me the big thumbs up, so that's got to be a good sign. I mean, how do you get to that point? And the answer is you have to plan. You have to do all your work ahead of time. Yes, it's boring. Yes, it's a lot of work. Yes, there's no reward for all that hard work. But that's how you win at this game. That's how you know if I plan that the halvening event for Bitcoin is coming up in 2 years, I've got enough time to set myself up so that when that halvening event comes, I'm ready to own this market. But you have to plan. And that's what we help you with. That's our job. I sure hope you hear me. I really do. Because it comes from the heart, and I've been doing it for 8 years, and I know it works. And I also know that if you don't, it doesn't work. And 9 times out of 10, it ends in heartbreak. So, how's that a pitch for our school, eh? All right. Did we have any other questions there, Chris, or shall we call it a night? Right on. Cool. Well, that's a special treat. Sign up for the 30-day trial just to listen to him. I tell you, that's where, the irony of this crazy game is that, I think we had a presentation. The peeps were telling me last week while I was face down in a ditch that our level 1 instructor came on and he just blew. No, it was our secret options formula captain. We have our alumni on the school program, people who have taken all 3 levels of the program that get introduced and actually invited to our advanced stock traders group. And sort of our captain of that group, David O, he came on the Daily Brief, right, Chris? I think that's who it was, eh? Yeah. And he just blew everybody away. It was just an absolute treat for all the sort of regular site members. They're just like, wow, who is this guy? Where can I get more of his charts? Oh my God. So, and the irony of it all is each of these individual presentations could easily be like a day seminar unto themselves, easily. And it's all part of just this, TRI, PMA. We just give this stuff away practically. So I definitely think there's a hell of a lot of value in this site, folks. ETH, well, the irony of it all is if it was left to my own devices, I think actually the trade would go perfectly fine. The only problem, and let's go check in on that, ETHUSD. So I stepped in and bought this thing at around $1,000. And I did it in our Canadian corporation. And for a while now, we've been sort of speculating, or no, what's the word? Humming and hawing about how we were going to move this company forward, because we have both a Canadian rational investor company and a U.S. rational investor company. I know it's really twisted and kind of bizarre, but anyway, it is what it is. And so, Trex pulled its funny business there about 6 months ago, and I guess maybe that's even 3 or 4 months ago. And on that event, I was just like, you know what? I've had enough of this Trex place. Let's just go and just liquidate everything. So I actually don't know precisely the levels. The instructions that I gave Sjord, keep in mind, we bought this. So we bought this down here at the bottom. And it was a total pull your, the trade out of your butt kind of trade. Clearly you can see, and often when you get like M's inside W's, oh my God, those are the most incredibly powerful formations. And sure enough, you can see hindsight 2020. Wow. So again, if you're watching this and you're kind of like, shut up with the rhetoric, Brian, I want to learn something here. Give me something I can chew on. Take a screenshot of this. And if and when you see this type of price behavior, this is absolute gold. You see how, I'm not quite sure why the color is so low there. Anyway, you see right down in there? Wow, wow, wow. See how it made an M, but inside that M, or actually outside of that M, is actually a bigger W. And when you see that, oh my goodness, that is monstrous buy signal. So ironically, at 1258, that's actually a buy. And I would argue it would make perfect sense, because 1258 times 2 is $2,500. And markets love to run to big, fat, round numbers. And I think $2,500 is a perfectly realistic, big, fat, round number. I'd also say, too, that, if we start drawing some horizontal support and resistance on this chart, I like the idea that we're probably going to work up into this cluster up in here. And again, what a surprise, that's 21, 23, 24, etc. Do we get a stab up into that 25? I actually like the idea. Now, my trade in particular, like I said, we went in and bought here. Account's doing fine. I mean, we look like absolute trading geniuses, but so what? What I would, at this point, we kind of said, the team, Julian Stewart and I, okay, let's start liquidating this Canadian company. We just unwind it. We'll go to cash. if 23 is as bad as I think it is, then we'll probably just use that cash to fund our salaries and pay everybody at TRI salaries. Because frankly speaking, I think that a lot of, and I know my marketing department's not going to like me to say this, but if crypto does tank here the way that I think it does, probably site participation is going to back off a bit. I mean, that's usually how the sales industry goes. And I would rather be in a very powerful position of strength, have like 2 or 3 years of income all locked away in the bank. So what I just asked Seward to do, and he told me he did another tranche of it, is we've just been liquidating. We moved everything off the Trex when Trex shit on Canada. And whatever we couldn't move over to Kraken, Binance, I think there was a couple other, I think it was just primarily Kraken and Binance. We just converted it to Bitcoin and moved that off at Trex. And we've just, what I would rather do when I would come up with one of these liquidation plans is say, look, and I'm not going to try and outsmart the market. We're not going to try and trade setups here. We're not going to try and time the market. We're just going to once a month, almost the exact opposite of like a nanny nibbles kind of strategy. Once a month, we're just going to liquidate 1/4 of the portfolio, 1/4 of the portfolio, 1/4 of the portfolio, 1/4 of the portfolio. So there's no sort of mental anxiety about picking tops and bottoms. There's no anxiety about sort of timing the trade. We're just liquidating, and we're going to take an average selling price of whatever the market is over that 4-month period. So that's the long answer to your question. The short answer is I probably still have half of the trades still on. I definitely think that this thing is going to work its way up into the $2,000–$3,000 area. But I am not trading that particular setup anymore. So I hope that helps. I don't know. What do you think, Chris? Did that answer that question? All right, cool. And if you're still in that trade, fucking rock it, man, because I don't see anything changing into this merge thing. What I would say here in the short term, if you're trying to time the whole Ethereum trade, is, and I don't know how long you've worked in the market, but it sure looks to me like this is an inverted head and shoulders here that's playing out. So, for the traders, because I've been sort of counseling with regard to Bitcoin, that I think we're in kind of a dead cat bounce kind of phase. And you can kind of see on the Ethereum chart that, there is the inverted head and shoulders. So if that's the case, then you want to take, and of course this is always tricky, but you want to take a measured move from the head up to the neckline. Oops, oh boy, this is where I always get into trouble. Let's try and stretch this out. I'll be an Apple expert by the time this trip is over. I don't know whether that's a good sign or a bad sign, but everybody just laughed. Oh yeah. Well, no, there is a specific name for them, right? Anyway, is that what it is? I'm not going to say that on air. That was so funny. Somebody the other day, and I don't think they even realized it, but they called us all nerds. And I thought that was funny. It was like, are you sure you wanted to say that? But I don't think they even caught on that we called them nerds. All right, so inverted head and shoulders. Well, you can see the neckline breakout, which looks like it's already happened. That should take us right up to about 1950 here in the short term. And that kind of makes sense, right? You've often heard me say wicks and tails like to be eaten. So there's a big old wick there that needs to get addressed. And I suppose if I was thinking about shorting, probably candle body highs as trade location. So you can see the inverted head and shoulders. That's painting a trade location up there. And also notice too, here comes our buddy, that 200 SMA screaming down here, which is probably going to correspond with that level. So in essence, this is a pretty good example where I talk about trade location. If I was short inclined, I've got wicks and tails, candle body highs, horizontal support and resistance, 200 SMA, inverted head and shoulders price objective, and then probably the coup de grace is what would a fucking bomb be off of this range, and my hunch is 2.618 probably lines up really nicely with that level. So maybe we'll finish the video off on this. Let's see what happens. 2.618. And we'll get rid of these. Doosh, 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 and boosh. Oh, look at that. You could not script that any better. That's kind of cool, eh? I don't know. I think that's probably a Portugal! So there's your short-term price objective if you're trading Ethereum. So, okay, guys, what do you think on that note? 2,400? Well, maybe 4.669. That might be up there. Yeah. So I said I like 2,400 down the road. So I wouldn't be surprised if we can break out through that 2.618. Let's cross that bridge when it comes to it. I think you're going to run into a bit of resistance. Maybe what we'll do is if we do break out through that top. Oh, okay. What the hell? Let's see.
Too much TA.
Yeah, I know. And I end up having a conversation in my head. No. Yeah, do it. No, don't. No, do it. No, don't. It's like, oh, shut up. You guys are driving me crazy. All right. So there you go. 4,669 right up into that 2,400 area, kind of like what we talked about earlier. I like that as an ultimate destination. I suppose we could work the whole way up. What's 877s, etc. And you could probably also do A, B, C, D off of this huge range. And probably you could even bot that out, you know. And my hunch is 50% price action comes up into here. But to be perfectly honest with you, that's another half hour, 45-minute conversation to map all that out. And I think I'm done. So yeah, I don't want to. Oh, actually, no, we had quite a meal, but we did bring you some really sweet food, man. Yeah. Yeah, you didn't even know that, did you? All right, what do you think, Chris? Should we call it a night? All right. Hope you guys on YouTube enjoyed this. Hit the like button, subscribe, ring Colleen's bell. I guess maybe we got to ring Nadia's bell now. Maybe that's where it should go. All right. I do. Oh yeah, I guess it's pretty low, eh? I'm sorry. Do I actually? Well, no, we won't have that conversation today. Something about sausages, right? And then Labrador retrievers. Okay. All right, everyone. I hope you enjoyed that. You know, we're having a good time in Portugal. If we're really lucky, we come out the backside of all this with a beautiful campus. That you know, the place I saw today, oh, I'm super stoked about. It was everything that I could possibly ask for in a nice package. And from what I understand, we have a few site members that have some even better places lined up for us to look at over the next few days. So, oh, this is so awesome. Thank you to the crew. Can I get a big Portugal? All right. Thank you very much to Chief Marketing Officers, Josh, doing a great job holding my hand. Thank you to show producer directors, Chris over there, driving the bus. Thanks to everybody. You know, thank you for even tuning in. I hope I made a small difference in your day, week, month. Maybe something I said today resonated with you. We're here to help. Tons of content on the free channel, YouTube. So bury yourself in that. Maybe after about 20 or 30,000 hours, you might decide to actually join the site. We have a 30-day trial, so you can come in and kick the tires. I think we have an education program second to none. Might be a little bit short notice to shill you on the school. So if anything, I'll leave it up to you. You know, my marketing guy saying it's never too late, right? We do have this raffle coming up. You never know. Come on the site, join the raffle. You might just win. Hey, we'll change your life. Who knows? In fact, actually, our level 1 program, we have not raised the price through this whole inflation nonsense. So you could actually make the argument that because of the inflation push, actually our prices are going down. So think of it that way. Glass is half full kind of guy, right? All right, everybody. Have yourselves a great night. PMA for the win. All the best. And the only thing left for us to say is bye for now. Portugal! Oh, yeah.